Shreyas, hi, afternoon. Apologies to keep you waiting. We were just chatting about as to, what could be the impact of these new norms by the RBI or proposed ones on IREDA. So we're chatting with the management. But tell me, what is it that you're making of this volatility which has suddenly sprung up? I mean, almost it's become a pattern that the day the markets hit a lifetime high, and that very day they also fall quite a bit. You'd have to unmute yourself.
Yeah. Hi. Good afternoon, and thanks for inviting. So as far as markets are concerned, obviously, when it comes to the movement which we have observed over last 1 year or 2 year, 3 year basis, definitely most of the stocks are pricing in a lot of positivities around. And if you look at especially from the valuation perspective, they are at the elevated level in both mid, small, and a section of large cap as well. So barring probably FMCG and a portion of IT in large cap, and some private sector bank and NBFCs, barring these 3 pockets, which actually constitute a large part of Nifty, but barring 3 pockets, everywhere else the valuations are relatively elevated compared to their pre-COVID valuations. So at such a juncture, normally what we observe is depending on the news flows and depending on the events ahead, the large event ahead, we need to go back and look at the earnings and the earning growth, how it is panning out in this result season. And you are seeing most of the volatility at the stock level is definitely based on the result season, the way it is panning out.
Okay, point taken. Since we are talking about earnings, we have got the earnings from a couple of these FMCG majors, and they put a bit of a different picture. One says the rural recovery is a lot better, whereas there are others who say that urban consumption is actually now slowing down. Do you anticipate a big churn within the FMCG portfolio given the rise of rural now and flattening and plateauing of the urban?
This feedback from various companies has been mixed in nature. So again, in some part of urban, the base effect may be playing out because of the sharp urban recovery which happened post-COVID in FY22, and on a full year basis, FY23 and a part of FY24 is where urban recovery has been sharper. So on that base, we already observed that some companies with that pent-up demand, which was shown in the urban sooner or fast urban recovery, are not keeping pace on the earning growth. In my judgment, mostly towards after actually 6 to 7 years, normally cyclically the things turn out. So there is a possibility that yes, cyclically some of these things may turn around in near future.
What about the cycle in real estate? Because that was on a clear uptrend. The earnings so far have been very impressive, whether it's Godrej, whether it's other companies as well. And right now as well, if you look at the stock price of Brigade, Sobha, Godrej, they're all doing quite well. At what point will you get a bit worried and start booking profits or recommend booking profits within real estate?
See, real estate as a sector, if you notice, most of the sectors, which includes real estate, which includes many other sectors where there is a consumption pattern or there is a upper part of cave or the richer India, the consumption pattern. We have seen that, yes, this part has been doing well for quite some time. And even now, the way results are panning out, the way companies are disclosing their launch patterns, their collection on the launch as well. So when you look at some of these numbers, the things are really doing well in some of the pockets. So real estate always has been the local business, and in key cities, the real estate is doing well. So one need to watch out for the sustainability of this and look at it accordingly.
Right. Shreyas, where is it that you believe that there's still value and some growth visibility in the market? I mean, not many believe that maybe FMCG, like you were also talking about, could be that one pocket, but still no clear signal for IT, and valuations definitely are not at reasonable levels still.
Yeah, so always in India, Valuations you have never found at a reasonable level, especially in the sectors which are large cap oriented. So normally in the mid and small cap, there was a time pre-COVID at that time, the valuations probably were really reasonable. But when it comes to large caps, you will always find that the valuations are elevated. However, in the relative context, so the relative context, that's what I was highlighting, that three main segment by weight in the large cap are FMCG, private sector banks, and some part of IT. Here you are seeing the valuations are probably compared to their pre-COVID valuations are not at a really high elevated level. And that's where any turnaround, so everyone is watching out for that. So any turnaround, whenever it happens, definitely is a good development for these sectors.
Okay, Shreyas, on that note, we let you go. Appreciate you making time and speaking with us today. So that's the latest coming in from Axis Mutual Fund.
If you like this video, then like, share and subscribe to ET Now.